bombers is unprecedented. Provocation may be, or depending where you stand, a necessary precaution.
And US Secretary of State John Kerry has held a joint media conference with his South Korean counterpart. He has reaffirmed America's alliance with South Korea and described the North's leader as dangerous.
What Kim Jong-un has been choosing to do is provocative, it is dangerous, reckless, and the United States will not accept the DPRK as a nuclear state. And I reiterate again, the United States will do what is necessary to defend ourselves and defend our allies, Korea and Japan. We are fully prepared and capable of doing so. And I think the DPRK understands that.
Joining us in studio now to talk a little bit more about the impact on commodities is Pete McGuire. He's from NG Farrer. Good morning to you.
Good morning, Brooke. Good morning, James.
Just to refer back to James's comment earlier, geopolitical concerns, and yet we haven't actually seen that oil price move too much. Why is that?
Well, in some ways I think it has. You know, it's bounced pretty strongly from that $89 level we saw a couple of weeks back to 97, Brooke. And really the US dollar, I think everyone was very focused on the Cyprus what was happening over there. From a geopolitical standpoint, the Middle East is still bubbling away. And now you've seen a little bit of heat coming from Southeast Asia as far as Korea and so on. So it's all underpinned, and I think WTI has rallied fairly strongly. Brent, the gap has narrowed to around about $13 between Brent and WTI.
And what's that saying?
I just think that there's been momentum as far as the US oil market, more so than Brent. We haven't seen that strong uptick as far as what Brent went down to around about 107, 108, whereas WTI was $89 only a couple of weeks ago.
So why then? Why is Brent not moving in the same sort of pace as we've seen with the NYMEX?
Well, I think principally, James, the major reason was that WTI was oversold to the downside, and there was a very large price divergence between the two crudes. We got to around about $20 to $22, and that's since narrowed down to $13. Principally, the issue at play is that WTI was oversold and it's caught up.
Let's go to copper, because we were talking last week about a lot of bearish bets being placed on copper.
Yeah, with the hedge funds and so on.
The hedge funds, exactly. So maybe not unsurprising, you're starting to see that copper price come off.
Yeah.
What's been I mean, overnight it was down 1%. What's been the trend, though? You
know, one of the big things is China and the US, and the growth is stuttering over there. They're saying, I know that the equity markets are doing quite well, but when you look at orders coming through and there was a little bit of oversupply in the market, that's since taken an effect, and we're only seeing that, you know, factory reports are showing that growth is contracting, and you're seeing that copper market now around that, you know, $7,300 to $7,500 a metric tonne. That seems to be pretty much the range at the moment. I would have thought with crude oil getting that uptick, it may have taken along its brother copper to some extent, but it certainly wasn't the case.
So is that painting a more bearish picture about the global economy?
Well, if you roll that across to steel production, and I mean, there's got to be a linkage between copper and steel, certainly. You know, when you see the largest steel manufacturer come out yesterday and say, the chairman that is, that Bayo Steel, there's been overproduction and overcapacity, and the market is probably just has too much sheer steel, then you're seeing a softening of that market as well. So that going along with copper, it just seems to be taking a little bit of a, you know, sideways to negative stance at the moment, Brooke.
Do you see that turning around? I mean, in particular, copper, it's such a global economic barometer.
Absolutely.
I mean, do you see a turnaround there, or do you see ongoing concerns, particularly out of Europe with some of the data we've had recently, continuing to weigh, or is it just a supply-demand issue?
I think, well, first off, you've got a softening of that whole Eurozone, and I don't think there's no real sunshine over there at the moment. I think it's going to be a lot. I'm not going to give you a time horizon when it gets back to $10,000 a metric tonne, but at the moment, it seems to be fairly confined between that $6,500 to $8,000 trading range, and I don't think there's going to be any great breakouts on either side due to the current market. I would have really thought with the equity markets the way they were, that would have been an uptick for it and would have taken it along, but that hasn't been the case, because everything that gets manufactured, from motherboards on computers to to every part and parcel as far as production has some component of rare earth or certainly base metals included.
So where would you be bullish? I mean, if people are looking for some sort of commodity, maybe buy an ETF, get some sort of an exposure, I mean, what do you see as the near-term mover to keep an eye on?
Well, I think that what you've seen is that crude market has been very strong over the last, best part of a week and a half to 2 weeks, and I think you could see a continuation. I wouldn't be surprised to see WTI this early in the year, considering it's only April. We're still a month and a half out from the summer driving season, or a month out. And then, that hurricane, that traditional time of year, if this geopolitical starts to gain some more momentum in that Southeast Asia region, you could see WTI at $100 or $105. So that could be the place to be, James.
All right, Pete, got to leave it there. Great as always to talk each Wednesday morning. Thanks a lot.
Thank you, James.
Stay with us here on Trading Day. Coming up, we'll take you live to Sydney. British Airways announcing updates to its Australian route, so that is just ahead.
With CFDs, I can trade